People often ask me how to figure out the real value of a stock. While I have my own methods, why not learn from the best? Warren Buffett, the ultimate expert in finding undervalued investments, can teach us a lot. You see, value investors like Buffett first assess the worth of a business before they even think about the stock price. Welcome to Master Wealth, and in this video, we'll break down Warren Buffett's explanation on how to calculate a stock's true value. When questioned about his approach to analyzing the Berkshire Annual Report and other annual reports, Warren Buffett provided insights into the critical tools he prioritizes and the guidelines he follows when making the most of these resources. He also discussed how these practices align with the filters he employs as part of his company valuation methodology. Buffett's methodology for determining a company's genuine value as an investor centers on forecasting its cash flow over an extended period, such as a century, or until the company ceases operations. According to him, this extended forecast is the most accurate way to estimate a company's true value. Investors can ascertain this value by predicting and discounting the future cash flows, which he likens to bond coupons. Buffett emphasizes that a company's value is not tied to its stock price, but rather to the cash it generates over time. Recognizing the inherent challenge in forecasting these financial flows, particularly for high-tech companies, Buffett acknowledges that they put forth diligent effort to assess and project future cash flows in businesses where they have a solid understanding of the underlying dynamics. Central to determining intrinsic value, Buffett underscores the importance of cash flows. Investors allocate capital with the objective of generating returns, calculated based on the anticipated cash flows the asset, in this case a business, will yield in the future. In their investment strategy, Buffett and his partner, Charlie Munger, employ a set of criteria to narrow down potential investments to companies where they possess a high level of confidence in their ability to predict future cash flows. They achieve this by discounting these future cash flows using the interest rates associated with long-term, risk-free government bonds. Buffett distinguishes between investors who focus on a company's operational performance and speculators who are primarily concerned with the stock price fluctuations. He firmly aligns with the former, believing that the success of an investment hinges on an accurate forecast of the company's future. Conversely, he does not rely on making profits if their evaluation proves to be incorrect. Lastly, Buffett emphasizes the significance of transparency in his investment philosophy. He advocates for comprehensive reporting that empowers investors to grasp the critical variables affecting the company's capital allocation decisions. This transparency facilitates independent assessments of intrinsic value, especially when reviewing Berkshire Hathaway's holdings in well-established companies like Coca-Cola, Gillette, or Disney, where accessible and comprehensible information enables others, such as Charlie Munger, to arrive at intrinsic value assessments consistent with their own perspectives. As we wrap up today's video, let's talk about some important things to remember when trying to figure out how much a company is really worth. First, let's focus on the company's expected cash flow. Basically, how much money is the company going to make? The trick is to estimate how much that money is worth right now. Don't worry too much about being super precise. A rough guess will do. As Warren Buffett, a famous investor, once said, "I would rather be vaguely right than precisely wrong." When you're thinking about where to invest your money, it's a good idea to choose companies that have been around for a while, make a profit, and have a clear plan for growing. Some businesses are so complicated that it's hard to come up with a quick and exact value. So that's it for today, everyone. These are the basic things to keep in mind when figuring out how much a company is worth. We appreciate you watching, and if you found this helpful, please give us a thumbs up, subscribe for more, and turn on notifications so you don't miss our helpful advice. Keep investing, and we'll see you next time.